As the country eases into advanced level 3 of the lockdown regulations and sectors that closed during the lockdown slowly resume activities, the COVID-19 debt repayment holiday most banks offered will expire at the end of the month. But a survey conducted by credit bureau TransUnion shows many consumers may not be able to pay their loans. Some people continue to borrow against their savings, and it looks as if many South Africans may still need an extension beyond this period in order to recover. FNB has already said it will extend its debt repayment relief program to customers. But what if your bank is not necessarily prepared to extend the payment on your loans? I'm now joined via Zoom by the Director of Consulting at TransUnion, that's Carmen Williams. Carmen, thanks very much for your time and welcome to the AM Report. At the start, do you think all banks, in fact, should follow suit with FNB?
Well, absolutely. It's clear that consumers are certainly feeling the pain. What we are seeing from the survey that we conducted is that 84% of consumers report that they have been negatively financially impacted when it comes to COVID-19. And we expect this number to increase, especially, as you mentioned, payment holiday windows coming to an end quite soon. We are in talks with banks and hoping that banks will follow suit in terms of what FNB has come up with. But the general view in the banking sector is that they will evaluate each case and look at the merits of each case on an individual basis, based on what consumers can afford going forward.
And how practical is that really, or do you think this is just a statement made in order to protect themselves against, I guess, having to commit to a broad stroke type of concession? I mean, if 84% of the people you surveyed are giving indications that they might be in trouble, it's a clear sign that we're not just talking about a couple South Africans here, but possibly hundreds, if not in the thousands.
Yeah, indeed. What we've actually seen was that, applying for a payment holiday is a vehicle that's been around even pre-COVID. And during that time, pre-COVID, we saw about, as the Credit Bureau, we saw about 150,000 applications being made a month. And in the month of April, this went up to 382,000, so more than 100%. And in the month of May, this went up to 1.2 million. So there is a substantial number of consumers that are certainly in distress. But what's interesting on that point is that of this 1.2 million applications that we see from the Credit Bureau perspective, when we looked at the results of our most recent survey, what we found was that only 20% of consumers reported actually having this financial accommodation. So to your point exactly, with only 20% having this, there's a large chunk of consumers who don't actually have this vehicle, and we do foresee this to exacerbate going forward.
And I guess the immediate question is, whilst we wait for the banks to finally give these type of concessions, what can consumers who find themselves in trouble actually do? Surely there must be some kind of option, given the fact that nobody could have predicted that we'd find ourselves here.
Absolutely. And I think to that point, what we actually saw in our survey, which is actually more concerning, is when we started the survey back in April, we saw that 1 in 10 consumers had reported having lost their jobs. And in the most recent wave, this went up to 1 in 6. So almost 16% had reported having lost their jobs. We also see quite a number of consumers, around 37%, having been impacted in terms of having their work hours reduced as well. So absolutely, this is certainly a growing concern. And what we would encourage consumers to do to that point is reach out to your lenders. Our results show us that not a large amount of consumers are actually reaching out to their lenders and explaining. Lenders are very willing to accommodate consumers, but it's up to the consumer to approach their lender and be proactive about their financial situation.
It's very interesting you mentioned that, right? It is the responsibility of the consumer to step forward. COVID-19 in many respects has exposed some of our fault lines, and one of them perhaps is around financial literacy. Has your survey, the work you've done, exposed whether or not we are doing enough to ensure that consumers who are taking out loans, who are getting into these long-term commitments, know exactly what the implications are and what the responsibilities are on their end?
What we have seen in the survey, that when it comes to monitoring your credit as a consumer, this number has certainly increased over the last few weeks. So consumers are becoming more and more aware that it is their responsibility to take ownership, to understand the implications of their actions in terms of missing payments and how that may affect their future access to credit.
Right. And, we live in a world where we often want to see the good guys win, one would imagine. But for that to happen, they need to have the law on their side. Do you think regulations in their current form at least protect consumers who, for whatever reason, may have blind spots that don't enable them to respond adequately to this type of situation?
Well, there are a number of vehicles. The NCA is one of them that is designed and was designed with having consumers in mind. They have a number of policies in place where cooling off periods apply, where consumers can easily access different mechanisms. There are debt review and debt counseling processes in place also to assist consumers who do find themselves in financial constraint at the moment.
Sure. Well, thank you very much for your time and your insights and the great work that you do. Hopefully, many consumers will be empowered through some of those surveys about a way forward, especially if they're feeling the financial crush. Carmen Williams is Director of Research and Consulting with TransUnion Afrika. Carmen, thanks very much for your time indeed.